What's happening? What's happening, everybody? Let me get my IG together. Trying to get my phone right because I don't have my. I'm using my stand I used to use for my phone back in the day. For my light over there. Give me 1 second. I just got back here trying to get myself together. Y'all know how I do. We wait till the last minute. YouTube. Give y'all a couple minutes to get in here anyway. Yeah. It is 6:30, right? Yeah, 6:30. It's 6:30. Anybody in here? Is anybody in here? Man. I ain't got myself together for real, for real. I ain't got myself together for real, for real. Go to YouTube. All right. Pin this link. Pin this. Golly. What's happening? What's happening? What's happening, everybody? As y'all filter on in, y'all go ahead and filter in. Everything sound. I ain't on no ICT, right? Everybody can hear me. Can y'all hear me? I ain't on no ICT, am I? While y'all filtering in and I get myself together, I'd like to welcome y'all to the weekly wrap up for February 24th, 2023. Man, this year is getting up out of here. You hear me? Getting up out of here. Hey, if this first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you to everybody except for Robinson for always tuning in to Tim's Tidbit, hanging out with me and my homeboy back over here. His name's Spidey. He's over there chilling by the desk. He's no longer chilling by the window. And shout out my sweetie. She's back over there in the corner. She's joined us in the studio now. So, hey, everything is all gravy. Yeah, man. Hey, man, if you don't know who I am, man, my name Timothy Lee Rogers. I'm just your neighborhood friendly retired man. Trying to tell people to do what? Trade what you see. And if you like this t-shirt, you can buy one at the newtlr.com. That is the newtlr.com. Thank you. Hey, man, if you tapping in on IG, pull up on YouTube so you can see the screen when I share the screens. But like I say, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, man. Monday through Friday, that is, twice a day. Once in the morning at 9 a.m. Eastern Standard Time, then once in the evening at 6:30 p.m. Eastern Standard Time to talk about the price action dealing with the S&P 500. Why do I do this every day for the free 99? Because I want to help somebody like you and like you too, if you're on IG, like you and someone like you get the aha moment when it comes to trading, investing, all things stock market, all for the free 99. You hear me? Hey, shout out to the Spider Gang. Shout out to everybody. Shout out to everybody who be tapping in, hanging out with us every day, man. This is the weekly wrap up. This is the time where we have the opportunity to share in the chat if we want to share how our week went. I ain't even gonna hold you, gang. Y'all been straight up slacking on sharing how your week went. But I get it. You don't want to share when you're messing up. You only want to show the receipts to Neiman Marcus. You don't want to show the receipts to the Dollar Tree. You don't want to come through with the Dollar Tree receipts. You only want to show the receipts for Saks Fifth, Neiman Marcus, the high-end receipts. Them the only receipts you want to show. I see how you're doing. That's okay. I ain't going to call you out. Hey, let's get to it, man. If you're on IG and you want to see the screen, please pull up the YouTube. That'll be youtube.com/thenewtlr. youtube.com/thenewtlr. Please tune in. Hey, let's go ahead and get into it, man. Hey, as y'all see, as we talked about the other day, we might have been on the Black Spider stream. I might have talked about it on the public stream too. But as we were saying yesterday, we was like, hey, looking at this overall picture right here, just at first glance, it looked like the algo is coming for the lows below this swing low right here. And that was a low made back on January 25th. At the time, we were trading over here somewhere. I can't remember where it was. It was like above this low right here. It was like above, because it was yesterday, I believe. It was above this low here. We said the first stop is taking out this low. And then once we take out that low, the next stop is that low right there. And as you see, yesterday, we took out that low as we discussed. And then today, we took out that low as we discussed back when the price was up here. Hence, no hindsight, just reading the tape, learning how to read the tape. And you too can do things like this. And we share it every day for the free 99. Oh, yeah, forgot to say this part. Got to put the disclaimer out there because I don't want to tick nobody off who comes to my channel. I only trade concepts that I learned from ICT. If you're not into ICT concepts, if you can't stand to hear his name called, you think the stuff he teach is a whole bunch of bull cocky, this is not the channel for you. It's still over there. It's not a bookshelf anymore, but it's still over there just in case somebody forgot. Now, back to what I was saying. We came down and God dog it. Y'all know what I just thought about? I was so tired today. I'm sorry, y'all. I was so tired today. I was going to send out a screenshot for the Spider Gang who like to trade the afternoon session. I was going to send out a screenshot and I fell asleep at the desk when I was trying to put it together. And I never put it in the Discord. I never shared it on Twitter, right? I was going to share, see right here, I was going to share a screenshot for the Spider Gang that like to trade the lunchtime, that like to trade the lunchtime. When I got off the live this morning with the Black Spiders, right? I looked at the dollar. Shout out Mendez. Shout out Mendez. Mendez been on this dollar. Mendez has been on this dollar. You feel me? He been on it. I ain't even gonna hold you. Mendez been on that dollar. But back to what I was saying. I looked at the dollar. And for anybody who don't know what's going on right now, if you don't study ICT's concepts, I was looking for SMT divergence between the dollar and the ES, because I wanted to see if the ES was going to potentially continue to slide after it hit my downside target. For anybody who don't know, right? We'll talk about taking out this low right here. My downside target was the bottom of this fair value gap. Me and the Black Spiders talked about it earlier this morning. I said, hey, if we get to the bottom of this fair value gap, I don't want the short anymore. If we get to the bottom before retracing, I don't want the short anymore because that's my target. The bottom of the fair value gap is my downside target, right? And when we got to my downside target, I said, okay, let me go check out for some SMT divergence to see for the Spider Gang who like to trade in the afternoon. Cause shout out, I think it was Father of Legends. I can't remember if it was Father of Legends or I think it was Father of Legends. But he was like, hey, this price action putting me to sleep. I'm gonna check out this afternoon. That's one of the reasons why I was looking for it. So, long story long, I was looking at the SMT divergence between the dollar and the ES, right? And if you notice right here, this is around the time when we poked through the low, because Black Spiders, remember, while we was watching the price, we consolidated that close to my target forever. We consolidated there forever. And then we finally poked down through it, right? So I want to see if this move was likely to continue. Why did I want to see that? Because we had fallen forever. Like, this is like the overnight price action back here somewhere behind this astronaut helmet. It's like over here. This is 24th. This all this right here. This is from, I can't even get back to the close, right? Anyway, all this is overnight, and so we closed over here. So we closed up here somewhat. Like we closed up here, and we had come so far, right? It's all scrunched up so you can't tell, but we had come so far already. So I was like, hey, how likely is this move to continue to the downside? Right? So I went in, and right there when we broke, when we hit the bottom of that fair value gap, I saw the SMT divergence. Now, for anybody who don't understand the SMT divergence between the dollar and the ES, they are inversely correlated. They're not going to be lockstep. They're not going to be tick for tick. I saw this, but I was afraid. Hold up. I just seen somebody say something in the Discord. Is that to me or to somebody else? Oh, that's something else. That's something else. They talk about something else. Okay. All right. So, right. SMT diverges between the dollar and the ES, right? If the dollar is failing to make higher highs, but the ES is still making lower lows, or if the dollar is making higher highs, but the ES is not making lower lows, that's SMT divergence, right? So, Tim, what does that mean? I'm glad you asked that question. If you look here from 925 up until 1055, right when we took out that my downside target, right when we got to my downside target, the ES had made lower lows, meaning it then got to either ran out some sell side, it then hit a discount PD array, it then got down lower than low. So under here, it's coming down and taking out sell side up under these lows right here on the 5 minutes. So it then ran sell side. It got to the bottom of a discount PD array on the higher time frame, on the daily time frame, but the dollar is failing to run buy side. The dollar is showing weakness. The dollar is showing weakness. Now, you look and say, hey, Tim, the dollar showing weakness, but the ES is dropping lower. Ain't that weakness too? It's not always weakness. Wise grasshopper. You seeing great, but it's not always weakness. Sometimes it's just a run on liquidity. It's a liquidity purge sometimes. So you're coming down here, selling to willing buyers, right? You're selling to willing buyers down here. You can over here, think about it. You got short up here, right? You went short up here, right? It's coming down and resting up under this low right here is a whole pool of willing buyers to just buy from you, right? So when you get down here in this pool of willing buyers, you just going deeper and deeper, just going as deep as you can, pause, to see how much coins you can collect. So you're just running liquidity. Over here, the dollar is showing weakness. It's showing weakness. So if the dollar is showing weakness and is failing to take them highs, what is the dollar likely to do? Start to drop off. So the dollar is starting to drop off. The ES has run lows. So the ES starts to go up, right? Get a break in market structure to the upside right there. You take out a short-term low here, another short-term low there, breaking market structure there, take out intermediate term high. I said low, high, intermediate term high. So anywhere in this range right here, you could have been looking at an entry to take it long back up to where? Attack that high, shave off, attack that high, shave off, attack that fair value gap. You have places to tier out so that you be like, oh, how high up is it going to go? I don't have a freaking clue, but I see tiers. Once we break this high here, I can get in. I can shave there at that high. I can shave there at that high. I can target this fair value gap. What if it don't ever get there, Tim? I shave there, and then I can close my position if I want to. But that's what I was going to send out right there. I never sent it out because I fell asleep. So to the people that traded in the afternoon session, I jolly pies. You probably didn't need that anyway, but that's what I was going to do. That's what I was going to do. And since we over here on Al Gore's internet, let me delete this, and we're going to go over here and holler at our friend. If you don't know who she is, she go by the name of Spyleen. At least that's what we call her around here. We call her Spyleen. Who is Spyleen? The ETF, the SPY, if you will, that tracks the performance of the S&P 500. We even wrote a song for her. You want to hear it? Here it goes. Sing with me, y'all. Clear your throat. Get your pitch right. Spyleen, Spyleen, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Spyleen, look what you done do. You done came down and went up, came back down and went up, came back down and went up. Spyleen, we gapped down today from yesterday's close, and then we just pretty much went sideways during the New York session. It was a very ho-hum day. A very, very ho-hum day. Let's see if we can break down the price action a little bit, and then we'll call it. I've shared what I want to share. We've looked at Spyleen, and now let's see if we can break down the price action, starting with the New York Open. Hey, my data was in real time today. My data was in real time today on the what's the name? Right there. You see how I say data is the market closed, data is delayed. Earlier today, it was in real time. I had no delay on my ES data on TradingView. Does anybody else that's on the free TradingView, did anybody else have real-time data today? And if so, how long has it been doing that? Because my data used to be like, Tim took 2 trades, first one failed. I took. Y'all over there chatting it up in the Discord. Oh, yours was in real time too. Okay, from the 9:30 open, we pushed up, came up here, got an institutional order flow entry drill off of this 5-minute fair value gap right here. Institutional order flow entry drill on this 5-minute fair value gap right here for anybody. Let me put it. I'm putting it all the way out to the end of the day. I'm gonna go all the way to the end of the day. So for anybody who don't know what I'm talking about when I say institutional order flow entry drill, you see how this wick came up here and just barely poked into that fair value gap, and then we sold off, came back down. Got a breaking market structure to the downside. Right there, created a SIBI. Anybody who don't know what a SIBI is, that's a bearish fair value gap. Right there, we created that SIBI here on this 940. That'll be the 945 candle on Ninja Trader. Right. Then we push back up and on the 1005 candle and touch. This is the area right here for the short idea that I was looking at with the black spiders. This was a short idea I was looking for. We was targeting something just above this on the 1-minute time frame. This candle right here came right to the high of this 5-minute fair value gap was the low of the 1-minute fair value gap that we were targeting. Then there was a 1-minute breaker above it, and we was targeting that also. But this 5-minute fair value gap right here was the trade we was looking at to the short side, which eventually brought us down, and we paused right here for a long time until we poked through the bottom of that daily fair value gap. Do I have that marked on here? Let's see if I got that marked on here. No, I don't have it. I don't have it marked on there. The TDA that I marked out is much higher than that. I had it marked out on my I had it marked out on my Ninja Trader. It's marked out on the Ninja Trader. That fair value gap right there. That's the one I was talking about. That daily fair value gap right there. So we came down, poked through the daily fair value gap. After I got off the live, I want to see if we were going to come back up and drop back down. That's when I told you I dropped down. I went and looked at the divergence between the dollar and the ES. This is the time. This is the time after we got off the live. This is the time when I came in and was looking at that. And if you notice here, while we was trading here from this high, right, we was making the lower highs, and over here we were still making lower lows, and took out that what's the name? So that's when I was supposed to send out the thing saying, hey, we got SMT divergence. This downtrend may stop. We may go up. We may pause. We may do something, however you want to trade it, but it's looking like it's less likely to continue down. That's what I was going to send out. Didn't send it out. Jalapies again. So we pushed back up. We took out the buy side liquidity again. Another institutional order flow entry drill off that same 5-minute fair value gap. And we came back down, traded through this bearish fair value gap, right? So we got the wax on and we got the wax off of this bearish fair value gap right there. And then once we got the wax on and wax off, right? We actually got the wax on, wax off over here, but we got the wax on, wax off again. So we went through it, came back down, went through it again, and then we started to use it as support over here. So we blew through it, semi-support there, came back down into this fair value gap right there, right? Disrespected this order block, right? We came down, act like we was going to respect it a little bit, right? Act like we was going to respect it a little bit, fake me out, come down. Took out those equal highs right there, sold down, came back into this fair value gap, this bullish fair value gap here. Came back into this bullish fair value gap here. Boop, boop, right? Filled the bullish fair value gap. Notice the bodies of the candles stayed inside the fair value gap. Like ICT say, the wicks do the damage. The bodies tell the story, right? Pushed up, came back down to the fair value gap again. Filled in this tiny bullish fair value gap right there. Made our move up. Use this previous bearish fair value gap that has been repriced and rebalanced after we left it, and used it as what? Support. Sat on it as support, pushed back up just above consequent encroachment of this higher bearish fair value gap on the 5-minute, pushed back down, used that fair value gap again for what? Support. Bounced off it again, came back up to this, disrespected this fair value gap, went back up to the top one, right? Did we fill it in? Almost filled it in. Came very close to filling in that bullish fair value gap 5 minutes before the close. And then that's the last counter. And then at the close, we were here. So we closed, the body of the candle closed right at the low of, so today we closed right at the low of that top fair value gap right there, bearish fair value gap. Tried to add a little bit more talking to it to share a little bit more with the people. Why is that? Oh, that's why. Share a little bit more, talk through the price action with the people to try to what's the name? I still have delayed data. Yeah, I don't know why mine was showing live data today. I've never seen live data on TradingView for the ES, but for the ES, like when I looked over here, see how all these D's are here right now? D on ES, D on NQ, D on YM, D on ZB. Today, there was no D. The only D that was over here was on the XSP. That's the only thing that had a D. Everything else did not have a D, and it had a green light over here. And when I hovered over it, because I was like, it's glitchy, but it's live data. And when I hovered over it, it was like updated every 5 seconds. And I was like, that's why it's glitchy, because my Ninja Trader was tick for tick, but the trading view, my Ninja Trader, just say my Ninja Trader was moved like 4 ticks, and then the trading view would just still be sitting there. Then all of a sudden the candles would just match. You know what I'm saying? It'll be like, and then so it was only updating like every 5 seconds, but it was live data. It was live data. I'm gonna see if it's still doing that come Monday. That's all I got. What is the top rectangle called again? This right here, this rectangle right here, a bearish fair value gap. A bearish fair. You called it something different than a. Oh, a SIBI. You know the SIBI and the BISI, right? This right here is a BISI. This right here is a SIBI. This right here is a SIBI. The SIBI is the sell side imbalance, buy side inefficiency, right? The BISI is the buy side imbalance, sell side inefficiency. And a lot of times I try to, instead of just saying fair value gap, bearish fair value gap, bullish fair value gap, SIBI and BISI is less syllables, and it gets the job done too. With, instead of saying this is a bearish fair value gap, right? Meaning it was a fair value gap made going to the downside. This was a bullish fair value gap, meaning it was a fair value gap going to the upside. This is a SIBI. This is a BISI. Just saying the same. It say the Oh no, that's institutional order flow. That's when now it's not the rectangle. It's not the institutional order flow is not the rectangle. The institutional order flow entry drill. That's I'm sorry, I got to type it out. Institutional order flow entry drill. Institutional order flow entry drill. IOFED. IOFED. Institutional order flow entry drill. It's not the rectangle. It's when price, if you, let me change it to the arrow. If you notice, when the candle came up, let me make it real big. All right. When I see right here, you got this entire SIBI right here, right? But price came up and it barely poked in right there, like it barely poked in. ICT called that an institutional order flow entry drill. And what is, and same thing over here, institutional order flow entry drill. When you go into the fair value gap, when you just touch it, or if you poke into it just a little bit and quickly retreat out of it, he called that the institutional order flow entry drill, because order flow at this time is bearish, right? So the order flow is bearish. And what lets you know that the order flow is bearish is because we're in a sell program. What lets you know that we're in a sell program is because price is taking out sell side, and the up close candles and the the premium PD arrays are rejecting price or supporting the move. They're supporting the move down. So the order flow is bearish, right? So when you're coming down, as you push back up, the institutions are looking for a spot to enter into more shorts or longs on the other side. So as they push back up and they get to this premium PD array, it's like that the algos fire off really quick soon as it touch it, and they firing off so quick it's just rejecting it back out and pushing price back down. It's firing so quick the price can't fight through the fair value gap and completely fill it. So it's the institutional order flow entry drill. That's what he called it. Get out of here. get out of here. And then it fought all the way up past equilibrium. If you notice right here, let me put a line on here. Let me put a line. God dog it, line, come here. Oh, I just can't see it. Right? If you notice right there, once we came back up into it, past where we was doing those institutional order flows right there, we kind of hung out in there for a little while, soaking up more liquidity. But when we was first hitting it with the institutional order flow entry drill, it get out of here, get out of here. And I'm doing that sound because I got a friend that trade high frequency Forex, and when he be he be trading on like the 5 and 10 second charts, 15-second charts, and whenever he enter his trades, it'd be like that's the sound it be making, because it be firing off that fast. It'd be like that's how quick it be firing off. So that's why I be making that noise when I do the institutional order flow entry drill. Hey, Michelle, get off my screen. So hopefully I was able to help with that and explain that a little bit better. I appreciate that. Here to learn and share with the notes, and you see how I use the stock search thing to, you know what? I want to share some thought process for a minute. My oldest son says that he's ready to start learning how to trade, right? And it brings me to think about ICT's youngest son said he's ready to start to trade. And what I hope to instill in my son is that all of this stuff right here that I talk about on this screen, all these ICT jargons, ICT concepts, all of this stuff right here, it matters not if you don't understand what price is most likely going to do. If you don't understand what price is most likely going to do, I don't care how many acronyms, how much jargon you know, how many fair value gaps you mark out on your screen, how many you can have indicators to put fair value gaps and liquidity voids and volume. You can have anything you want on your screen, but if you don't understand where price is trying to get to, it don't even worry about trying to set up a model, because you're just gambling. You're just guessing. You might as well just put your indicators on your chart and rely on the indicators, because they're going to do far better than you. The indicators going to do far better than you. They got a success rate. Long as you use good risk management, you can be profitable using any kind of algorithmic indicators or whatever. But if you're truly trying to learn how to use ICT concepts, please, I bet, and it's the same thing I'm going to try to instill in my son. Learn how price moves. Learn how price moves. Learn what price does. There's so many things. When people, like the other day I was like, people inbox me and be like, hey, what ICT concept, fill in the blank. I can't advise any ICT concept for you. My only thing is go look at his entire core content from month 1 through month 12. Take copious amounts of notes, study, and then just watch the candles print. If you don't know, when I first got on here, right? When I first got on here, I talked about the other day when we was talking in price, I'll get over there. The chart looked like this, right? The chart looked like this the other day when we was talking. Might have been a little lower, might have been a little higher, whatever. The chart looked like this. I said, Price is coming for this low right here. Looking at this overall market maker sell model here, price is gunning for this low right here, right? I said, but the first stop, it has to take out this low. Then once it take out this low, then it's going to take out that low, right? That's clue number one of where the price is going, right? Looking at the way price is moving, we're coming here, right? I understand where price trying to get to. I have a target, right? So now that I know where it's going, that's when you go into effect and start to put in all the other things that he teaches, like looking for SMT divergence between inversely correlated markets, right? Looking for SMT divergence between correlated markets, right? Looking for SMT divergence between correlated markets, right? If you don't know what a correlated market is, they move in the same direction. You see how this, when these are all of them coming down together, they move together in the same direction. Inversely correlated, they move opposite. Understand how to look for that. Understand what's coming up on the economic calendar to expect volatility. When the volatility comes in the market, understand when to sit back and wait. Figure out how does the market tip its hand, right? Can somebody please put in the chat the way Lil Timmy Rogers identifies when the market tips his hand? ICT calls it distribution. What do Lil Timmy Rogers call it? What make it make sense in my mind? What do I call it? I don't call it distribution. Somebody put it in the chat for me. Understand when the market tips its hand at which way it want to go, right? You notice I haven't talked about a fair value gap yet. You notice I haven't talked about an order block yet. You Pioneer! You feel me? Pioneer! I ain't talked about an order block yet. I ain't talked about a fair value gap yet. I ain't because it's so many things you got to keep up with inside your mind before you go and push that button on a fair value gap, before you push that button on an order block, before you push that button to get a turtle suit, before you put, it's so many different things you have to do before you push that button. And then now that you've identified where the liquidity is, right? Now that you identify where the liquidity is, you've identified there. What do you do if there is no SMT divergence? What does that mean? You got to figure out what that means. What does it mean if there is SMT divergence? You got to figure out what that means. For the people that's lazy, I ain't leaving y'all out either. I'm gonna help you along the way. You identify where the liquidity is, right? Tim, what are you talking about? You just look for highs and lows. You look for prominent highs and lows, right? You look for you look down here, that's a low, right? You look up here, that's a high. It's liquidity. There's stops. There's buy stops up here. There's sell stops down there. That's where the liquidity is. Okay, we figured that out. Now, you look for SMT divergence. What do you do if there is no SMT divergence? If there's no SMT divergence, the direction that the market is going is more likely to continue going that way. If there is SMT divergence, the direction that the market is going is less likely to continue in that way. But if it does continue in that way, it might be very difficult to get to the liquidity, or it may just chop and slop around and not really try to move toward it. That's what it means if it got SMT divergence or no SMT divergence. Now, okay, I see the SMT divergence, or I don't see the SMT divergence. What do I do next? You wait for the market to tip its hand. You look for, ICT call it distribution. You see this move, this big move. Let's look at this. That's distribution. That's a pang to the downside. You see these candles shooting up right now? That's a pang to the upside. That's heavy distribution. That's the market tipping its hand that I want to go in that direction, right? So when you see the SMT divergence or you don't see the SMT divergence, you wait for the market to give you the pang. Now you there. Now, I still haven't talked about entering. I still ain't said nothing about a fair value gap. Still ain't said nothing about an order block. Now, you got the pang out. Now that you got the pang out, what do I do? Now, that's when you start looking for your discount and your premium PD arrays, right? So you're looking for your discount and your premium PD arrays. Now, you see, we got to pang out to the upside, right? What PD arrays are above us. That's when you start identifying your fair value gap above you, right? Your fair value gap below you, your order block below you. What you start identifying your PD arrays. And then once you identify your PD arrays, then you start looking like, where do I want to enter? I want to buy because it gave me a pang to the upside. Now that you know where you want to buy, then you look at the price leg of the, we just gonna say this right here was the price leg of the ping. We said upside, so we look for the upside. So let me get my line so I can see it, man. So you go from the bottom of your price leg, right? Come here. From the bottom of your price leg to the top of your price leg because you want to go up. You drag your fib up. Well, Tim, why am I dragging my fib up? Because you're buying, so you want to buy in the discount. Smart money buys in a discount. They sell in the premium. Okay, so now looking in a discount, what are the PD arrays in the discount? Oh, when I look in the discount, I see a fair value gap. I see an order block. Then you decide which PD array do I want to buy off of in the discount. That's when you decide. If you only trade fair value gaps, you are only going to mark out the fair value gap. If you only trade order blocks, you are only going to mark out the order blocks. Well, Tim, what if it's none of those in a discount? Well, you don't trade. So there's a fair value gap here. I'm a fair value gap trader. So I'm going to mark out this fair value gap. And this is what I do every day. The Black Spiders can attest to this. I say, I need price to come back down into this discount. And this is the fair value gap that I'm looking at because there's no more downside risk under this fair value gap right there. And then when price comes back down to the discount, after we got the pang, it came back down to where the fair value gap, and then it went up, and took out the high. But notice, me talking about the entry came in a long time after I had did so much other stuff. I understood where the price was trying to get to. I understood what the price, I looked for divergence. The divergence came in. I looked for the market to tip its hand. When the market tipped its hand, I looked for PD arrays. Once I saw the PD arrays, I picked out the PD arrays in the area that I wanted to be a buyer or seller. Once I picked out the PD arrays, then I identify where's the market trying to get to after I get in, so I know what exit I'm trying to get out on. I'm trying to get out on that exit, and then Bob's your uncle. Bob's your uncle. And then if I wasn't tired of talking, I would show you another trick that you can do, but it ain't all about doing tricks. It's all about understanding. So that's all I got to share. And that's what I'm going to try to instill in my son. I just went like all the way through it for the lazy people. I don't want to leave the lazy people out. I know everybody not going to put in the work. So for the people who don't like to watch the videos, don't want to sit through it, I just talk it out, and then I give you the cliff notes. Show us the trick No, I'm not. I showed you the trick already. The trick is when you're on the lower time frames and you want to get an exact number to shoot for. So when you're on the lower time frames, you just run the fibs on the price leg of the pang, and then it'll give you a target to shoot for, an exact number. That's all. We done did that before, Rich Genius. It give you a target to shoot for an exact number. That's it. Let me go down here and see if they got one. If they got a price leg that I can run the fibs on. What are we on? 1 minute? Yes, we are. We're on the 1 minute right here. Go there to the low, to the high. God dog it. Hey, why y'all ain't tell me I ain't got the screen up? Oh, I see you say chart, please. Okay, go on. Let me take this off. Why y'all ain't tell me I ain't had a screen up? Anyway, I come down. We was on the 1 minute chart, right? I mean, we was on the 5 minute chart. So we're on the 5 minute chart. We talked about the SMT divergence. We got the pang out right here. The market gave us the pang out. We took off here, right? Then we come back down. We looking to enter right down here around this fair value gap right there, this 5 minute fair value gap. Let me get this other junk out the way so we don't get confused when we in the lower time frame. Going to mark out. We went up, we came back down. So this is going to be the high right here. That's going to be the high right there, right? So we need that on the screen because we want to get our exact number. Let's go with daily box top. Right. Don't worry about that. Say daily high. I just got that name on there. I just want it to be green. Okay. So now we identify where we want to enter to right here. Boom. That's what we want to enter. Remember, you can't see these candles yet. We just know we want to enter there. We got the pang out. And then now we pulling back down. We want to enter here. That's the discount. We identified everything. Now we're going to go down to the 1 minute chart, right? Boom. We can't see this stuff over here. Right? We can't see none of this over here. Shrink this down. Right there. Okay. So this is where we want to enter it down. This 5 minute fair value gap right there is where we want to enter right there. So we coming down, right? Spread it out like this right here. So when it get down to the 5 minute fair value gap right here, we dilly-dallying, right? So what do we want? We wait, and we on a lower time frame now. So on the higher time frame, we got the pang out and we got the stuff. So when you get to the lower time frame, it's the same thing, right? Now you could very well just soon as it hit it here, go long based off of your higher time frame analysis. I'm just going long. I ain't going down to no 1 minute. I ain't fooling with that 1 minute. I let you do that, Tim. Cool. You enter right there. Boom. You might have to sit it in a little longer, but on the lower time frame, right? When you're looking at it, right? So now we're coming down. This is the area we want to go long. We get to that area. This right here is the rejection. This is the confirmation on the lower time frame, right? Remember when I told you about, I see you talk about when you throw a ball. He told his son, you throw a ball and it bounced back. This is on the lower time frame. So this is a higher time frame PD array. When you get down to it, you get that rejection, aka the what? Pang out. So we got the pang out right here, right? We come down, made a high, made a low, made a high, made a low. This right here in the middle, that low has a higher low to this side, a higher low to that side. This right here looks like a what? A swing low. But when we get that pang out, right? So then we come from, this is where we enter here on the 1 minute. Why? Because we got the pang out. This is our fair value gap in the discount. Let me draw it out in case y'all can't see it, because I know I got it scrunched up a little bit. This is our fair value gap that's in the discount on the 1 minute right here. Boop. Can y'all see that? Yes, y'all can. Right? So We come down, we got an order block down here that we came down and touched too also, but we came back and touched the higher frame 5-minute fair value gap again right there. So we entered right here on the 1 minute. This is our 1 minute entry, right? This is our 5-minute entry. If we was entering off the 5-minute candle, this is our 5-minute entry right here. If you go consequent encroachment, if you go on the touch of the fair value gap, the 1 o'clock candle is the entry. That'll be 1259 on, 101 on Ninja Trader. If you go with consequent encroachment, it'll be the 108 candle on, or the 109 candle on Ninja Trader, right? If you wait for the 1 minute, get the pang, come back down, it'll be right here on this 132 or 133 candle, your entry. Now that, boom, we got our entry right here. We came down, we got our entry. So from the entry high, right? Because we came down, made a low, popped up, pang out. From the pang out high, right? From the pang out low to the high of the pang out leg, right? So coming from, not low, but the entry low, the entry leg low that we entered on, back to the previous high, which is the leg of the pang, right? You look for the deviation that's above the high where you're trying to go. So your exit target would be 39.8175. That would be your exit target, your exact number you're shooting for to get out of this trade right here. You can use, this is a high right here. If you want to play it safe and shave, you can use this deviation that's above that high, 39.7325. You can shave there if you want to, right? Because there's a high, the deviation above that high is 39.7325, right? The target, is here at 39.7850. The deviation above that high is 39.8175. That's how you pick the exact numbers where you want to get out. And if we move forward in time, look at there. All of our targets were hit. The shave target was hit right there before retracing back a little bit, right? So you came up, shave target was hit, boom. When it pulled back down again, ICT would use this to add more to his thing. That ain't my way I trade, right? Then we go up again, and then the actual target was hit, boom, right there, handsomely, right? And then we started coming back down a little bit, whatever. But that's how you go in and pick your exact targets for once you get into the trade. That's the trick I was talking about. And that's just using the fib extensions based off of, I call it based off the pang, but that ain't what it really is. It's just, the market is tipping his hand at which way it want to go. This is, he actually calls this institutional market structure. Institutional market structure, where it come down, it make a swing low, a lower swing low, and then a higher swing low, right? And those three lows act as one swing low in totality, right? So you can use the last leg of the swing low to do predictions. You can use the lowest low. So you'll go from the lowest low to the prior high, right? The high of this swing low right here. And then if you use that one, your target can be 39.81 even, right? And it delivered to that handsomely also. Boom. If you use the lowest low, that's how you will use it to project your targets. I like to use the low of the pang leg, because that's the leg that I'm entering on. I'm entering on this leg, so that's the leg I want to project from, and that's how you that's the trick. Now, where's my treat? Because I'm on here for 54 minutes. I showed you the trick. Now, where's my treat? Who asked for the trick? Whoever asked for the trick, you owe me a treat. That's all I got. What y'all got? Y'all got anything? Hey, Rich James, get off my screen. My battery low. IG say my battery low. Ain't nobody on there anyway. I'm about to hang up. That's all I got, y'all. I ain't got nothing else. I just want to share them thoughts. Again, there's a lot that goes into trading outside of just knowing about how to identify fair value gaps, head and shoulders, how to draw trend lines. I've been saying this a long time. It all starts with the narrative. It all starts with the narrative, right? Where's price trying to get to? Where's price trying to go? If you don't understand where price trying to go, ain't no need to draw a whole bunch of boxes on your screen, because those boxes is just going to confuse you. Learn how to read the price. At the end of the day, learn how to read the price. If you Ninja Trader makes it easy. You can play back the data in Ninja Trader and it prints the candles tick by tick. I don't know any other platform how they do it. I know how Ninja Trader do it. Ninja Trader is the only platform that I ever use for back testing. But it plays it tick for tick. So it's just like being there live. If you don't have Ninja Trader, or if you don't like Ninja Trader and your platform don't let it play tick for tick, if yours do it that goofy way where it just pop the whole candle up, like if you're looking at a 1 minute candle, it just pop the whole 1 minute candle up, it don't show it print out, then record your screen. If you ain't got screen recording software, Ninja Trader free. You can download it for free and use it for 14 days free. You know what I'm saying? Go in there and download as much data as you want. It lets you download 3 months back. Go in and download 3 months back worth of data. It's free. Then you can go back and just watch price print for 3 months back, and you can watch it to your heart's content, and you will be able to watch the candles print in real time and just learn how to read the price action. And it's free. You ain't got to buy no screen recording software. There you go. There you go. Hey, man. Tucker had a question above. Michelle, what was your question, Michelle? What was your question? Chart, please. Chart, please. What's up, folks? What's up? The Russell's in here. The hardest lieutenant on the tank in the building. I understand divergence. Yeah, we talked about that. Tim don't even know what Tim said. I think y'all just want me to read what No, I don't see no other question that Michelle had. I don't see no other question Michelle had. Anyway, look here, man. We going into this weekend. I got an opportunity to talk to my oldest daughter today. She called me on FaceTime. We had a good conversation. Y'all already know what I be talking about, you know. Call you grown kids. Yeah, baby. I don't know what kind of divergent SMT, what does that stand for? I don't know if you answered that or not. That's what she asked. What is SMT? ICT don't even know what SMT stand for. He never settled on a name. He said it can stand for either smart money tactics, smart money techniques, smart money tools, he never settled on a name for SMT. He didn't use them all. He just said smart money tools, smart money tactics, smart money techniques. And I think recently, he been leaning more towards smart money techniques, I believe, but he never gave it a name. I'm sorry. I missed that. He never gave it an actual name. It's just divergence. It's just divergence, but he put the SMT in front of it to like coin his own terms. Just like all the terms he say he'll pay somebody $2 million if they can go back and find the stuff he teach in a book before 1994 when he started teaching. And he said he'll give somebody $2 million if they can go. He used to be saying like, I think he said like 100,000 Then I think he said 500,000, and now he's saying 2 million. He's like, if you can find the stuff that he teach outside of the Larry Williams stuff, but all his stuff with like his fair value gaps and all of that, he said, if you can find it in a book before 1994, when he started teaching it, he'll get somebody $2 million if you can find the stuff he was teaching. But don't put off till tomorrow what you can say today, man. Call your loved ones and let them know that you love them. Your grown kids, call them, talk to them. Hey, mama, think about you. Daddy, think about you. If your parents still here, call your parents. Let your parents know that you love them. Take advantage. Tell your kids that's living with you. Tell your spouse. Your fuzzy little, furry little pet kids. Let them know that you love them, man. Don't put off till tomorrow what you can say today. Don't just say it. Don't just show it. Say it, show it, and confirm it. Why do you need to say it, show it, and confirm it? Because you can be doing all you can do, thinking you showing all the love in the world, and they're not receiving it because you're not speaking in their love language. How do you learn how to speak in their love language? Talk to them. Figure out what their love language is. Do the little love language test with the, what is the 5 love languages book. Figure out what their love language is and learn to communicate in their love language so that they can receive the love that you're trying to give. Take advantage, man. Don't put it off till tomorrow. Ain't nobody promised tomorrow. I appreciate y'all for always hanging out with me. Shout out to Gang who support the channel in a financial way. I really appreciate y'all. I really appreciate everybody who pull up every day and just tune in for the free 99. I really appreciate y'all. Keep sharing it with your friends and family so that we can reach as many as people possible, so we can expose as many people as possible to this free information so that we can build this new Wakanda together. Don't forget, man. Trade what you see. I'll see y'all Sunday. If you part of the gold members and the black spotter members, I'll see y'all Sunday for the weekend chart prep. If ain't nothing else, man, y'all enjoy your weekend, enjoy your families, enjoy your dinner tonight. Gone. Yep.